So welcome back to my channel, Flaten Invest. I'm a popular tool investor. All my trades, all my investments are public and transparent, how I like it. And today I would like to take the time to talk with you a little bit because I see there's more and more, what can I say, an influence over young people that trading will make you rich. But I'm here to say that unfortunately, they won't. I wish it was different, but today's topic will be why trading won't make you rich, but investing will make you wealthy. I think it's an important part to make that difference. I think it will help you. I think it will help you in the future. That if you can start today investing slowly, surely, you will be able to build a wealth that you will be happy with. Doing a quick meme coin, doing a quick meme stock, going all in on one, throwing in 10K, 1K, throwing in everything you have on one thing, it won't get you there. I'm sorry. It's gambling. It's better you go to your casino. Go to the casino, have fun, blow that money. Like buy a drink, have fun. But when it comes to investing, investing is boring. Investing should be continuously just buying, not looking at it, buying, not looking at it, monthly, all the time. And I'm here to talk to you a little bit, so I hope you have your earbuds on. I hope maybe you're out for a walk, maybe you're at the gym, maybe you're making food, maybe you're in your bed. Whatever you might do, even if you're gaming, just try and listen and understand that I'm here to talk with you. We're here together. I want to help you. We'll do this together, and I hope that in 10, 20, 30 years, you'll be happy you stumble upon this video, as I'm happy I stumble upon many YouTubers. So if you really want to learn something in depth, different companies, stocks, etc., there's amazing YouTubers out there. Please don't hesitate to use them. Go for it. Look them up. Joseph Carlson, It's in the Money, etc. They're all fantastic. Go and look at them. Pick up a book from Peter Flinch, Warren Buffett. Might be boring, might not be you. Read it, listen to it, check a YouTube video about it. Bill Ackman, listen to the podcast with him and Lex Friedman. Learn a little bit of who these people are, what they do, how they do, and understand that they're not going to a casino every day. It's just purely not. So, without further ado, let's get into it. So, please, for the love of God, I'm going to come up real close to the microphone, okay? Just so you can really hear me. Don't get sucked into the get rich quick schemes. It's not worth it. Don't let they take your money, okay? We all have the dream that turning like a small amount, $100 into 10K, turning that into millions. I just need one trade. I just want more extra trade. I need one extra option. I need to gamble. You hear? I need to gamble. It's a gamble. You get hooked. Yeah, a lot of people have a gambling addiction, and you might think, no, this is the market, it's not gambling. I know, I do my technical analysis. Look at all these people. First, technical analysis, it works until it doesn't, okay? It's that simple. It works until it doesn't. Accumulation, look at this trend line. It works until it doesn't. It can give you an indicator. It can make you feel better. It can make you feel like you have an understanding for the situation, but in the end, it's purely something can happen. You can invest in Google, and then at 2 o'clock, the Google CEO dies, and the stock falls. Technical analysis doesn't take that into account. Do you understand? So I want you to just get that completely out of your head. And the second is that when you look at Twitter is an extremely toxic place. You have some YouTubers, you have Reddit, they posts like a massive gains from options. You look at Wall Street Bets on Reddit and you're like, oh wow, look at these people, millions. what they're not showing you is their losses. And the thing is that often the people that put all that money into one position and they gain all that money, if they even do so, a lot of that is just edited because of social media. Remember what we always talk about when it comes to social media, that don't believe everything you see on social media. It's the same in defense finance space. Don't believe what people always post, you can't. But people are posting those massive gains. But the thing is that it's a casino. They're going to gamble it away anyway. Afterwards, it's gone. It's, oh, look at me. I found this way to do this thing. And you saw, I checked this thing. And I went all in and I succeeded. Take your money and leave. Take your money and leave. Put it into a Vanguard 500 ETF SPY, Put it in VOO and walk away. You won. Take that win and walk away. But usually the people that win there, if they do win, they're gamblers. They're addicted. They're going to come back and they're going to lose it all because they trade with their emotions. So I'm not saying that you're not allowed to. You can do it, but I rather than go with the boys, go to the casino, do something fun, use that money, go out to eat, get something value from it. Don't waste it. Or if so, make it a fraction, minimal fraction. If you really want that fun, that adrenaline, a fraction of it. But then if you gain something, put that gain into something. Say you have $100. You pay a leverage or you do an option over an earning. You gain that money, maybe you gain $60. Take that $60 and buy VOO and use that $100 again to something else. But don't lose that $100 and be like, oh no, I have to throw another 100 in and another 100 in. No, stop. So if there's something I can ask you, don't fall for these. And you're like, okay, but these people are showing me that they're having 300% gains and all I need to do is buy their course, buy their Discord. Don't do it. That's how they earn the money. It's from you. They're milking you. They're not earning money from their trades. No. They're earning money from you, so stop being manipulated, okay? Stop being taken advantage of. Be smarter. Don't be stupid, okay? Can you do me that favor? I'm here because I want you to succeed. I want you to have a great pension. I want you to be secure if something happens in your life. I want you to take good decisions. And you will probably make mistakes, but hopefully less than even I did. And by time, the more I can share my story, the more you research other YouTubers finding good stocks or good ETFs, by time, you will have lost less and gained more because your learning curve was much better. It wasn't as steep because you had help. So again, before you get sucked into somebody's trying to sell you a course, trying to sell you a Discord, trying to tell you what, when, how to buy, think about it twice. Think about that I rather have long wealth and gain gradually, like we see with everything. You see it, I will come into the analogy of the gym. We see this with everything. Things that are worth having takes time. And there's nothing else here either. It takes time, okay? Believe in what I'm saying to you, that I'm only here to help you. Use the time. You have time. That's your benefit. It's not timing the market, it's time in the market, okay? Okay, let's move on. So, to the gym analogy. Slow and steady wins the race, right? That's what we heard. And I want to make it clear that investing can seem scary, like going to the gym for the first time seems scary. Remember that for investing, at least, it's meant to seem scary. You're meant to be scared. That's how Wall Street get their money. It's from us retail investors. We're the one that are scared. We're the one putting money in. We're the one that gets scared when it dips, what's happening. They play with our emotions. So if this happens, if you're already invested, take a walk, turn around and say, Red days, perfect. Give me more. Give me more, I can buy more. That's how you have to think. And then you'd be like, I have no more money. It's okay. There will be a next time. And as I always say, put a little bit every month. It will go up, it will go down. But in the end, it's not about when you bought, it's just how much you bought, right? So think about that. But back to the analogy. Investing is often like working out. The longer you're in the market, it's like being in the gym for a long time too. You understand what you want to work out, how you want to work out, which do you want to do dumbbells, the barbell, machines? How do you feel today? How do you not feel? Do you feel okay? How does that contraction feel and not feel? And the longer you do this, the stronger you get. And the same when it comes to finances or investing. The longer you're in the market, the stronger you get because the more you see, the more you experience. The same with driving a car. I can use the same there. The more you drive a car, the more you see. The more you see bad drivers, the more you see good drivers. I mean, all of this is experience. So don't be too hard on yourself. You need experience. So if you really want to be invested in the market, it's not the best way to do it, but you have to have the experience. You have to go through all this. I had to go through 2021, 2022, 2023, 2024. All of this has given me a good perspective. I've seen ups, I've seen down. I still haven't seen a 2008 crash, but I've seen a COVID crash. I saw the crash in August. I saw the pullback we had in 2023. So I'm getting experience, and all of this hurts, but that's growing. It's like with working out. It hurts growing. Like you have to work out. It's going to take time, but you have to go back. You have to go back. And over time, it becomes easier. The more muscles you get, the stronger you get, the more you can lift, right? It's the same with the market. The more you're in the market, the more you invest, the more it compounds. The future gains get easier and easier because you know what to do, where to go, where to look, what you like. If you're just an ETF, you can see the compounding work for you, you know? And if you try to do shortcuts, like using steroids, it ends up being like leverage or options. You might see gains come extremely quick, right? Extremely quick. But the moment you stop those steroids, it's gone. It's gone. You lost it, right? And it's the same thing. You might see quick gains, but then you will continue and you will lose it all. You're doomed to because your emotions are in it. And if you're one of those people that say like, oh, I'm going to quit my job to start trading to make my money, don't do it. You won't succeed. And I'm not saying that to be like, oh, you won't succeed. No, I'm telling you as a friend, as a fellow investor, a person that cares for you, don't do it. Use the platforms to grow your money, okay? Don't use it to gamble, okay? And many people win once with options and they think they cracked the code, right? I had this one earning, so now I'm perfect. I know how to do, I know how to read, I know. You do it again, you lose it. You never know. You can see that in every earning. Pull up whatever earning you want. You can pull up Tesla's earning that was some days ago. Their earnings were awful, but the stock went up. That's because they talked about, they want to do robots. It has nothing to do with the company. So sentiment has a lot to do, and you can't control sentiment. It's out of your hands. You can do your best to prepare, but it will still be a gamble. That's why I say, rather put it in good companies. Think long term, okay? Let's continue. Okay. So, markets are unpredictable. Luck versus skill. Take Wu, for example. That was this Friday, January 31st, as an example. Everything was good. Everything was green. We were reaching new highs, right? Traders were posting their gains, 200, 300 gains, right? Nothing is edited on social media. Everything is true on social media, right? As we discussed. Then one unexpected announcement from the White House regarding the tariffs for Mexico and Canada. And you can see on the picture here as well on the right that this is around, I think it was 1:30 or 1 o'clock. They came out and they said, no, tariffs are coming. Tariffs are coming the 1st of February. And you see the market react. So the market digesting this news. And I can tell you, no technical analysis. Nobody will post their losses on this. Nobody will post that, oh yeah, no, I did a short. I knew this was coming, It's all lies. You can look at trend lines. You can look at volume. You can look at everything. Nothing will prepare you for this. Nothing. And that's why I say the sentiment is everything that matters for the market. What's happening, what's where, who, when. And it's not my money or your money that will shift this up and down. It's the market makers, it's the big boys. They will make this happen. So for you to sit there and gamble your life or like your salary away on this, like maybe you even took an option early morning, right here, around here, and you're like, oh, this is great. Of course not. Just a little dip. No, I won't take the gains. Like this will go higher, and then suddenly announcement, boom, straight down. You can't be prepared for this. That's why I'm saying that stop trying to gamble away your money on this. No amount of technical analysis, volume indicators, chart reading, chart reading, everything, nothing will predict this moment, okay? So if you're trading based on these patterns or gut feeling, you're gambling, you're not investing. Investing is finding good companies, a good ETF, and being, as I say, when you go to work out, you do it monthly, invest a little bit by little bit. Again, if it's $25, I don't mind. If $25 is a lot for you, it's a lot for you. But try and fit that in. 25, $10, $15, $50, $60, $100, whatever fits your budget. But you have to think long term. The $25, the $50 today in 30 years will be much, 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 much more worth. Okay? And it will help you so much. And you will thank yourself, like, thank God I put on just something. Me personally, I wish I could have started earlier, like with everything. With everything, I wish I started this earlier. I wish I started working out earlier. I wish maybe when you find out a diet that works for you better, you know how to eat, maybe fasting works for you, maybe you don't do well with meats, maybe you don't do well with certain greens. You find experience. And that's what I'm trying to give you. It's more like a shortcut in experience. And you will make mistakes. Falling off the bike when you try to learn how to ride a bike, it will happen. Try to ski, you will fall. But with time, trying over and over again, not giving up, being disciplined, this is the way. And I believe in you. I believe you will do this. I believe you will do the right thing. Okay? So, now to the final slide here. The only proven way to build wealth is investing over time. First one here, real wealth comes from long-term investing, just like real strength comes from consistent training. And that's something I want you to think about. And it's true. It takes time. The gym takes time. You won't see progression right away. The same with investment. If you invest today, everybody's like, oh yeah, I invested, the company went down. Great. If you like a company at $80 and it goes down to 75, you should love the stock. You should love it. It's a perfect opportunity to buy more. So stop thinking about like, oh, I'm a victim of everything going down. If you're a victim, it's because you chose an extremely bad stock. But if you're convinced in what you're doing and you're convinced in the vision of the stock you're buying and what they can be, who cares if it goes down? Going down means a buying opportunity. But if you can't stomach that, if you can't babysit the stock, choose an ETF. Choose ETFs, multiple if you want. Go on ChatGPT, go on a different website, go and search, see what is most bought. I will still recommend VOO. For me, it's the best one. And just go for that, okay? And just continue, because here, number 2, compounding works in the background, growing your portfolio year by year. And the more you can just build on top of this and top of this, adding a little bit and a little bit month by month by month, and reinvesting the dividends you get from the ETF, for example, growing this, because you can't think 1 year. You can't think if the market crashes in 2 years, great, you buy more. You're not gonna, what you're gonna do. And even if it's like the market completely crashes and there's nothing left, then the money you have will be worth nothing because the whole economy has crashed. You see what I mean? So just gradually build this up slowly but surely and think long term. 10 years, 20 years, 30 years, 40 years. Work your job, find a job you enjoy. If you're studying, study first before you think about investing and putting money somewhere, and gradually put monthly and monthly away. It's boring. I'm sorry, it's not a casino. I wish it was different. I wish I could tell you, like, just invest in that one stock and you'll become super rich. You won't. You won't. But I'm here with you, growing slowly but surely over time, okay? Great. Third, instead of trying to flip short-term trades, focus on assets that grow over decades, stock, ETFs, and businesses. So for stocks, if you can find, you can go for good companies that will never go away, like Microsoft, Google, etc., that you believe that will never disappear. But that's why, again, I will still push you towards an ETF. And for businesses, it's like, if you like to build your own business, do it, go for it, try it. Why not? There's also private businesses you can invest in through different websites. I don't have into mind now, but you have different private equity places you can invest in companies. I think it's some startups from Mark Cuban, the one from Shark Tank. He has a website where you can invest in companies that are still not public, and do that and try that. That's much more advanced. So I will still tell you not to do it, but the opportunities are there. And this is your journey, not mine. So if that's what you want to do, then go for it. But make sure you understand the consequences. Then you do it slowly and carefully. And because if you can learn a mistake expensively or inexpensive, right? So you can go hard in an option and you can lose everything and you will be depressed for months. You can go with a little bit in options, you can fail and you can be like, that sucks. But hey, luckily it was just $50. I had my fun, didn't go my way. So let me pull out now and I'm not going to touch that. That's too much. So be kind to yourself. Experience different things. I have done my mistakes. I have learned from my mistakes, but that's the most important. If you learn from your mistakes, they're investments, right? That's the main thing. In the gym too, if you do something wrong, your body will hurt. But don't go back and do the same thing one more time. Your body will just hurt even more and more. The same with the psyche here. So be careful, live properly, invest properly. Okay? And last thing, I would say thank you for sticking with me this long. I know I ramble a lot. It's how my brain works, unfortunately. I hope that you got some benefits out of this. I hope I can continue to make some videos that can resonate with you guys and give you a little bit of a push in the right direction. But in the end, remember, it's not timing the markets. It's time in the market, okay? So thank you again, and I'll see you in the next one, okay?